Welcome to Smart Investing Market Insights at TaipanFinancialNews.com. I'm Krista Das. Any summer rally starting in June is historically the weakest of all four seasons. Over the last 12 years, the S&P has posted gains in 9 Junes and has been down 3, with an average gain of only 1%, which ranks 7th out of all 12 months. To discuss this pattern in the markets, I've invited Ann Sosnowski, editor of Diligent Investor, to join us today. Ann, welcome to the program.
Thank you, Krista. I'm glad to be here.
And seeing as we're halfway through June already, when do you expect this rally to occur?
Well, I'd say the summer rally is going to start at the tail end of June, but it doesn't look like it's going to be a weak one this year. In fact, we've already seen new highs on the Dow at 13,692 and on the S&P at 1,540. Now, Krista, currently both major market averages are correcting to support at their 50-day moving averages.
And what impact do 50-day moving averages have on rallying markets?
Well, the 50-day proves to be the strongest support in rallying markets over the short term, and it has also shown resilience since mid-2006. Now, if we can see this average continue to provide support, then Dow 15,000 is a complete lock by the end of the summer, discounting historical information that summer rallies aren't extremely strong.
So what does this mean for investors?
Well, I think this provides a great opportunity for investors. Companies in the Standard & Poor Index are still at bargain prices, as the total 500 companies are 45% less expensive than they were during the peak in 2000. Now, not only that, but they're 30% cheaper than the low in 2002 of S&P 768.
Yes, and we've already seen major gains on the market averages since the beginning of 2007, correct?
Yes.
The S&P has gained 5.92%, the Dow is up 7.4%, and even the NASDAQ is up 5.48%.
That is correct. And interestingly enough, I noticed on May 31st that the Dow Jones was trading extremely far from its 200-day moving average. Now, when these large gaps between the price of the major market and its major technical supports occur for too long, major corrections usually follow on.
Explain how you use this information to make your market prediction.
Well, we saw action like this back in May 2006 when the Dow traded almost 87% above its 200-day moving average and then retraced back to support. Now, a difference of 7 to 10% between major market average prices and 200-day moving average support is cause to start rallying behind a correction. And only days after posting my editorial on this issue, we saw the Dow return to its 50-day moving average as it traded a whopping 10.9% away from its major support. Now, Krista, this recent correction allows the major market averages to continue on. It's primarily cyclical, and it gives me great cause to rally behind a continued rise during the summer. Now, even during the recent correction, put-call ratios were at the low end, meaning that more calls were trading than puts. That goes to show that investors are extremely bullish and will continue to buy this rally for as long as they can muster.
Any place that you would suggest?
Well, besides the major market, I like the Russell 2000 as a cheaper investment that plays off of major market movements, and you could make more bang for your buck. The reason is the Russell Small Cap Index actually trades for $820, but is continuing to maintain its support at its 50-day moving average. Now, I place a year-end estimate for this index at about $950.
So what do you believe is pushing this market?
Well, I still believe that M&A activity across the board, both domestically and globally, is pushing this market to new highs. Inorganic growth is a great impetus because change in the stock market signifies to investors that there's new opportunities. They begin to branch out into other investments other than the stiff blue chips. That's why I consider initiating a position in the overall M&A trend by picking out the merger fund, which the ticker symbol is MERFX. Now, it's already gained about 4.73% by investing in the companies that are publicly involved in mergers and takeovers, leveraged buyouts and spinoffs, among other things. Now, it pretty much runs the gamut of M&A activity.
What other markets do you suggest?
Well, I also like the IPO market right now. It's extremely strong, and we're only halfway through this year. We're still expecting an IPO from Blackstone and a spinoff of Discover Card. Considering the success of MasterCard as a credit card IPO stock, we should see more investors jump on the Discover IPO and increase the market as a whole.
So how can you make a safe play with IPO companies?
Well, to play the IPO companies in one safe investment, I would look at the IPO Plus Fund. The The ticker for that is IPOSX, and that has already moved about 6.53% since the beginning of 2007.
Great information, Ann. I guess we'll see how right you are about the markets in the next couple of weeks.
Anytime, Krista. Thank you.
That's all for today's edition of Market Insights. You can read more about Ann's market strategies as well as sign up for her investment newsletter, Diligent Investor, right here on TaipanFinancialNews.com. Thank you for watching. Until next time, happy investing.